The Australian dollar is fetching 101 US cents and change. It's firming against the rest of the basket, becoming, as George Lucas from In Street was telling us just a short time ago, one of the new safe haven locations, destinations, currencies. Still with currencies, the US Treasury now clearing China of currency manipulation, but it is saying that more has to be done to allow the yuan to appreciate. Now, in a report to Congress, China is being singled out, with the Treasury saying that it and 8 others, including Britain and Canada, are innocent of the charge that they manipulated exchange rates to gain a competitive advantage. The report is saying that no major trading partner of the US met the definition of manipulation in the period reviewed, though China resumed exchange rate flexibility 6 months ago and the yuan's appreciated. Treasury still saying there's still some way to go, and they'll continue to monitor the currency. Let's pick up that one with Chris Gore from GoMarkets in Melbourne and Jim Vrondas from Oz Forex. Jim, first off to you, this review from the United States, how significant is it?
Well, I think its findings are not anything necessarily that new to the market. I don't know whether it's that significant in terms of influencing the market's perception of how currencies should be traded in the near term. But obviously, some of those points are quite come a little bit out of left field, particularly against the Canadian on Canada, because obviously the Canadian dollar's trading at over 2-year highs at the moment, and that's something that the Canadian officials have mentioned several times in terms of the strong currency being not quite favourable to their economic conditions and not something that they really want at the moment.
How are you liking that currency alongside the Aussie? Because it was the chatter was just a few weeks ago that it was going to trump the local unit in terms of global sentiment this year. Has that changed?
Well, it certainly was the case up until, I guess, last week before the RBA statement and that we saw in the information coming out locally. That was the way the market was perceiving it. If you look at the cross rate between the Australian dollar and the Canadian dollar, still hovering around parity. So 1 for 1, I guess, in that regard. It'll be interesting to see, I guess, as the market progresses, whether that Aussie CAD can move higher or lower from here. But certainly we think that the Canadian dollar still probably has a little bit more upside than what the Aussie dollar does. So we're looking at that Aussie CAD rate to move lower again throughout the course of the next 6 months.
Yeah, Chris, what do you think of the idea of the Australian dollar being almost like a safe haven when you've got the Egyptian crisis unfolding and the idea of global risk in fact increasing?
Yes, in many respects it certainly is what we investors perceive to be a safe haven. Obviously we've had our own crisis in recent times in terms of the flood, the cyclones, etc. But I think the general consensus is around the world that essentially the Australian economy is robust and will continue to benefit from solid demand from China. So in many respects it's a real safe haven. But in the currency sense it may not be as clear as that. We know in times of adversity that the US dollar is perceived to be a safe haven, and of course the yen to be the ultimate safe haven. We've got other safe havens such as Swiss franc. And up until now we haven't seen those sort of times of adversity translate to Aussie dollar strength. Indeed, I think what we've seen is totally the opposite. Of course, we see the Aussie dollar take a hit when there's an economic crisis around the world, for example, on the back of Egypt. So it'll be interesting to see whether or not this perceived safe haven status that the Australian economy is developing at some point translates to positive things to the currency as well.
Jim Vrondas, if it did take a hit around that geopolitics of Egypt, it was so temporary that you could have blinked and then it was back in business. The same applies for the US market reaction to that, incidentally. What's going on? Why shrug it off?
Yeah, definitely the market doesn't seem to be as concerned as what it once was about the, I guess, the Australian economy and the Australian dollar for that matter. As you said, the Egyptian crisis saw a little bit of a sell-off in the Aussie dollar. We also had that thrown in, obviously, the devastation in Queensland as well. Yet the market somewhat was not that concerned about it. Obviously, the comments coming out last week from the RBA and the fact that they're comfortable with the effect on the economy suggests that the market's quite comfortable with buying Australian dollar on the dip still. We've we've got considerable demand still from the terms of trade, and particularly out of China for iron ore and the like. So I think the market's still seeing that demand feeding through and helping boost the Australian economy. So any sort of negative shock effects from global happenings seem to be having somewhat of a limited effect on the Aussie at the moment.
And what about domestic factors then, Chris? Retail sales today, jobs numbers Thursday, are they things that or factors likely to actually move the Aussie dollar significantly with that kind of macro theme in play?
Yeah, certainly. Any indication that the Australian economy is continuing to show robust economic signs will no doubt resonate or bode well for the local currency. Of course, we have retail sales today and ANZ job ads, which are a good precursor to what's happening on in the main headline figure for the week, which is Thursday's unemployment figures. And so the Australian dollar is very much still contingent on what's happening locally in terms of positive economic feedback. So we expect that to be a supporting factor for the Australian dollar. It is important, of course, to understand what's happening internationally as well. Of course, the US dollar is receiving some of positive attention at the moment after those non-farm payroll reports on Friday. So how long this continues on will obviously dictate direction of the Aussie dollar, but my belief is that essentially we'll see a moderation of this US dollar strength going forward into this week.
Jim Vrondas, though, like last week with jobs in the US, will China dominate for us this week with its own data and in turn the currency response there? What are you looking for?
I think still, in terms of the Aussie dollar anyway, I think the market will be focused domestically here. Still employment numbers on Thursday, and also Governor Stevens' testimony to House of Reps on Friday as well should be very closely watched. We're looking for more, I guess, a bullish undertone domestically here. In terms of the, I guess, the Asian outlook, obviously there's been some concern about possible slowing in China, but that's, as is evident with the rate of the Aussie dollar at the moment, doesn't seem to be having any sort of long-term negative effects on the Aussie. So any sort of negative downside shocks from China, again, likely to be relatively short-lived.
Chris, are you surprised at that fairly muted anticipated response from money markets towards China maybe softening and therefore the A-dollar still standing up? Because you talked about the perceived safe haven, retail sales, job ads and employment. They're not going to shoot the lights out here, are they? Well, maybe employment might, but everything else is pretty much lacklustre.
Yeah, certainly. If we have a look at some of our response in recent times to economic data out of China, it has been a little bit more, I suppose we're developing a tolerance in many ways. If things are going too well in China, of course, it has an effect, a negative effect locally as well. So, of course, what we're seeing at the moment is many market participants, I suppose, not necessarily take for granted, but understand that we will continue to see robust growth from China. In turn, will resonate positively to the local economy, and I do agree that like, for example, data that we have coming out later the week, which is trade data, which is fairly important indication on how China is travelling. Unless we see anything significant deviation from estimates, it will have essentially little to no effect on the currency. But of course, going forward, we have that monthly update from the Chinese economy in terms of GDP, fixed asset investment. All of those important indicators still carry I suppose, a relatively strong influence on the local market.
All right, and we've got the HSBC PMI for China the day before that trade data Thursday. Chris Gore from GoMarkets, Jim Vrondas from Oz Forex. Many thanks.